All right, good evening, traders. A very warm welcome. I am Devang Mehra from the Financial Analyst, and we are here with a post-market analysis video for 22nd December 2020, which is the Tuesday, I believe. Right. So what happened in the markets today? Let's discuss about all of that, and we'll rewind a little bit. We'll see what we discussed yesterday in our videos, and did it work out for us today, and what can we plan for the markets tomorrow. As always, we will again come live in the markets in the evening, so we can do a detailed analysis when the data of FIDI is out, so we can actually understand where the movement will be happening in the market. But right now, we'll just do a preliminary analysis of the market and of the markets to come by. Let's start off with Nifty Bank. And yesterday I told you something very important, and I said that whenever you get such a big candle, and I also compared it with the candle of 31st August. I said that whenever you get such a big candle, there will be some days of cooling off. It is possible because after such a big candle, some kind of retracement can happen. So we were expecting a doji candlestick to be formed today, and that is exactly what happened. If you see the charts of Bank Nifty, it's a doji candlestick. So does it mean I become bullish in the market? I'm getting a lot of updates, messages from people. Should we start to buy now? You can't decide right now. Maybe it's a start of, maybe the correction is over. Maybe markets want to go higher, but I can't decide that right now. Markets have given a doji, which I will consider as a pause in this fall. And always, I also showed you this example over here. When markets fall so much, they will pause for a bit, then only they can fall down. So today, after such a big fall, just like 31st August, has been some fall, a pause. And generally, there is something that we call a rule of three. This is again, if you are aware of WD GAN, this is called the rule of three. And it is possible that markets can halt for 3 days before continuing where they want to go, which I will come to in detail a little bit later. But it is possible that markets can stall over here for some time, and then again they can plunge down. That is one thing. And we also, one more very interesting point I told you. I told you that Bank Nifty is looking extremely weak. It is much weaker than your Nifty. And I also said that if Bank Nifty is going to break these lows, it will try to hit your lower Bollinger Band. And today's lower Bollinger Band level was about 29,008. You can see on your screen, and today exactly that is the low that has been made today. So these predictions that we did yesterday have held true, and we asked everyone in the community also to book profits. And I can show you a message that we sent out in our community. And around 11:14 p.m. a.m. We sent a message that if the markets are going to fall from here, Bank Nifty will find support at 28,946.25. So we tried to give an exact level of 28,946. If you see the intraday charts, let's see what happened at 11 o'clock. When we sent that message, after that we saw a 250-300 point fall in markets, and we made a low today of 28,976. On the top you can see the 28,976, just 30 odd points away from our target. But I think that's a fair enough judgment call. You'll always miss some opportunities, and I feel it's all right. So that is what we did in Bank Nifty. But it was very, very, why I gave 28,946, it was because at that point of time, the lower Bollinger Band was coming to 28,946. So yes, it keeps on changing. So the main thing is that you have to learn, for the coming days, that when markets go below the 20 MA on Bollinger Band, it will try to touch the lower Bollinger Band and bounce. So if the markets go below the lower Bollinger Band in the coming sessions, that will start a very big correction. That is one fact that we have to keep in mind. But until that doesn't happen, you will always find support somewhat at this point of time. One important thing that I want to mention is, yes, RSI has cooled off. It's come to 52. Yesterday, it was around 48, 49. Today, it's at 52. So it's come again back to that. So basically, it's in the consolidation zone. I will not say RSI is bullish. So 45 to 55 for me is considered as consolidation. I would say Himalaya believes in the same range. So 45 to 55 is a consolidation range. So as I said, we can see some kind of cooling off as we have seen earlier, and we'll see where markets want to go after this. So I will always recommend observe the markets for a bit. Don't jump the gun and say, let's start to buy at this point of time. But I want to tell you something very important about position sizing. Why people lose money in the markets is not because they don't know when to enter, just because they have the wrong position sizing at the wrong point of time. It's very simple. When we asked you all to short the market on the top of 21 December, at that point of time, our stop losses would be right over here. Let me just hide the Bollinger Band for you, because, every person who has sold the market, he will have a stop loss at 31,000 or whatever that round number is. The second thing is whoever has bought the market today, his stop loss will be 29,000. Very, very simple. I am not complicating things, but I'm just telling you a very, very simple logic. So currently we are in a box. You can't say you are bullish, you can't say you are bearish, but you are stuck in this rectangle which I am drawing. Let me draw it out for you. It's an exact range I will draw. We are currently in the range from the highs of this candle, which is 30,600 and 29,000. So we are stuck in this box. Everyone who has sold has a SL above this. Everyone who has bought has an SL below this. When can you aggressively sell? That's something very important. Anyone who has sold here would have aggressively sold. If you want to aggressively sell again, you can only do that below these lows, because at that point of time, all these people SLs will be hit. So currently Bank Nifty is somewhat supporting all these levels of 24th November, that this big correction that had happened earlier. So this low is somewhat, just the same of the low that has been made today. So every person right now has an SL at this point of time. The moment this SL is going to be hit, everyone will book profits, book losses, and cost to cost. That is the time where you can aggressively sell. When can you aggressively buy? Only when you are going above this range. That is the time to aggressively buy. I am giving you a logical explanation. It doesn't mean you can't trade between this. You can very well trade, but your quantity size has to be justified also. That is what I am trying to tell you. So make sure you have these couple of points in mind so that you can, be profitable and not increase that losses going by. So this is about Bank Nifty. Just like we planned, doji has been made. So we will have to observe what happens in the next couple of days. Is it a pause and then an inside? Because it is also very possible it gives you an inside candle breakdown. That is extremely, extremely possible. And that will also mean you are going below the Bollinger Band. Or further, it would mean you are taking a reversal and trying to go towards the highs. So that I will talk about when I come in the later half of the session in the evening. Let's talk about Nifty. Before I talk about Nifty, one very important point. On 23rd of November, if you see our TFA Talks video, we came up with an update that we are bullish on IT sector for December series. A lot of you have already seen this video. If you haven't, go check it out. And I told you that, markets in December at that point of time, it's on public domain. So again, we're not fabricating things. And we told you that, in December, markets will cool off and you need to be bullish on IT sector. And you can see the results. When we recommended you all to buy IT, it was around 22,000. It's given over here, CNX IT at 22,000. Today, IT sector, let me just check what the IT sector quotation is. And let me just open the chart, Nifty IT. And today, Nifty IT is standing at, it's given a fresh breakout. It's at 23,611. So you must be in profit if you have bought any IT stock at that point of time. You can see all the quotations in the video. You will be in a good profit. That is something as I promised. So that is about our recommendation. Also, some very important observation I want to, give you guys. Again, please don't hold me to it. I am giving you my analysis. I have a different style of trading. So it's up to you whether you want to, listen to what I say or you want to use your own analysis. But I'll give you my peace of mind. So first of all, IT sector has given a fresh breakout. If I draw the correct levels for you, IT sector over here, if you see, has given a fresh breakout. And yes, IT sector is bullish. Yes, we have RSI is entering the 70 region, but when RSI enters 70, it literally continues to the 80 region. So that is how RSI behaves. Yes, it is overbought, but it's also a sign of extreme bullishness. IT sector has given, and today entire markets, IT sector was the one which outperformed. Today, IT was up about 3.5% odd percent. And all the IT companies like LTI, FSL, Infosys, etc., and they have just led the gains. Also, which was the second highest gainer today? Today, the second highest gainer was Nifty Pharma. Something I also, and today Nifty Pharma, it fell down yesterday and took a support at 20 MA. Have a look at this. It has taken a support at this retest level. Why am I telling you all this? I have an observation which a lot of people in the markets will be knowing. What happens is, if I again show you the charts of Nifty IT, let me just hide my screen a little bit. If I show you the charts of Nifty IT, see what happens. When markets corrected on 31st August, let's open the chart of 31st August. This was the time, 31st August. When markets fell like anything in India on 31 August, I'll show you the Nifty charts. Nifty IT made new lifetime highs. You can see how Nifty IT performed. From 18,000, it went to 20,000. This is the duration when the Indian markets corrected for the first time after a long bull run. Let me show you again the Indian markets on 31st August. On 31st August, Indian markets went down from 11,800 all the way to 10,000. It's a 1,000 point correction we saw in India. And that was the time IT went up about 2,000 points. Generally what happens is, when the markets are bullish, why so how do we individuals allocate our assets? There are tons of assets to choose by, tons of sectors to choose by. How do we individuals allocate our securities? It's very simple. As you know, with the dollar index also, how FIs allocate. So if markets are looking scary, you want to allocate to safer assets. And if the markets are looking looking good for the future, you want to allocate for the risky assets. That's how you will be trading. The same is the case with Nifty. When the coronavirus crash has ended and markets gave you a good positive divergence and markets started to go higher, and when you had a good bull run in the market, this was a time people wanted to put money in anything. And here you can see all the sectors were going up. But when the market started to look scary after 31 August, what happens is profit booking started everywhere, banks, metals, etc. And this is the time where people, they don't want to leave equities, but they want to park their money in safe assets. In equity, which are the sectors which are regarded as safe assets? They are IT and pharma. All of you must be aware. That is the reason when the coronavirus crash happened, the first sectors to perform were IT and pharma. If you all remember, IT and pharma have given you absolutely stunning results and stunning returns. Look at any chart, any IT company. You can look at the charts of NASDAQ. It's at lifetime highs because people park their money in scary times in IT companies. It's a safe sector because there's no debt, and pharma companies because it's a cyclical sector and currently pharma is in focus. Where am I getting at? I am getting an observation. Why are people putting so much money in pharma, and why are people today putting abnormal money in IT? Is this a time where people are becoming scared? I am not again giving you an opinion. I am basically giving you food for thought. And this is something I will be analyzing over the next couple of sessions. Because if IT and pharma are going to perform, it is possible that Nifty starts to consolidate. It is possible that Nifty is heading for a small correction. Again, I'm not using the words of crash. I am not concerned whether the markets are crashing or not crashing. And I don't think they will crash. But there will be some kind of small corrections, and Nifty, IT and pharma, rising is somewhat giving me that indication. So that is just a food for thought. Keep it in your mind. We'll talk about that later. And let's talk about the charts of Nifty. Again, in Nifty, we were expecting some kind of a halt candle because it was a very big fall and markets can't keep falling 1,000, 1,500 points every single day. So we were expecting a doji as we did in Bank Nifty. You can see our previous post-market video. But today you got something like a hammer candlestick. Or some people would also call this bullish army candlestick. It is up to you. One good thing for the bulls is that RSI now is at 60 of Nifty. So anything above 60 is considered good. Another good thing for the bulls is you have taken continuous support at the 20 moving average. That's another positive signal for the bulls. What is happening in Nifty? Is Nifty again starting to go towards the highs? That we don't know, but the range is simple. It is 13,800 and 13,150. The position sizing for you will help. If you go above 13,800, that's an aggressive buy. Below 13,150 is an aggressive sell, because these are the SLs of your buyers and sellers. Let's try to analyze what has happened earlier. See what happened earlier. When the markets had fallen down this much, this was again a 400-point fall from 11,800 all the way to 13,300. It was a good 500 points fall. When the markets fell down, let's try to analyze where the markets retraced till. Because it's a very simple logic that whenever markets will rise or whenever markets will fall, they will always give you retracement before they continue the trend. Same is the case with the upside. If the markets are going upside, they will give you a retracement before they continue ahead. That's how markets function. So we have to understand whether it's a retracement or is it a reversal. Because even at this point of time, the 20 MA stopped the trend. Even at this point of time, the second candle was a doji but stopped by 20 MA, but it did continue lower. That is something I'm concerned about, because it really looks like something like this is happening in the market. So, and even at this time, you can see markets were at quite highs. It was at 70 RSIs. It was quite overbought and it fell down. So what do we do in such a case? And even if you see this big candle, when this huge red bearish engulfing candle came, markets did retrace quite a bit and then they fell down. But eventually they get stopped by the lower Bollinger Band. So even Nifty for right now, for the worst case scenario, would be this lower Bollinger Band, which comes to 12,816 as of today. So I will like to give you a small Fibonacci formula which I use in the market, and it can prove out to be helpful, or it might not prove out to be helpful, but let us try it out. So what I generally do is I see this huge red candle, and we know our Fibonacci ratios. So let's try to find out what is this, what is the range of this entire candle. The range of this entire candle is, we can take some rough numbers. This was coming out to be 455 points. So let us try to understand how much retracement has taken place. So you can use that Fibonacci tool that you already have on your screens. And if you take this Fibonacci number, what I have done is I have taken the I have taken the highs and the lows. Have a look at this. I have taken the lows and the highs, and exactly the retracement happened till the 0.50 mark. So generally, I would like to come basically to a conclusion. Generally, whenever such a big fall happens, yes, things do get some kind of, in panic. There is some kind of panic, but obviously there is so much selling, some kind of retracement will happen. So markets generally stop these retrace. It's a very big pullback. So generally markets stop these small pullbacks either at 50% or at 61.8%. These are numbers where it stops. Generally 50% is regarded as a strong downtrend. The reason is because if the markets move towards 61.8% is not stopped, it can again go to the highs. So last time what happened was market did stop at the 50% retracement level with respect to the entire big candle that came. That is one observation. If you look at the second big red candle that happened over here, we can again look at the Fibonacci numbers. Where was the market stopped? At this point of time, markets were stopped at 78.6. But this was a false breakout, and the RSI was not overbought, and it turned out to be a false breakout. So we proved out to be wrong at this point of time. But let's look at what happened today. Can we use that Fibonacci formula to find out what the retracement can look like? And maybe it can help us to identify if this is a pullback or it's a reversal in trend, because currently everyone is confused of what to do in the market. So we'll use these highs of 13,800 and we'll use the lows of 13,131. So currently, what is your 0.50% coming out to be? Currently, 0.50% is coming out to be at this level. This is nothing but 13,451, or we can take a round number of 13,450. Today we have closed above 13,450. Let me take the exact levels because this might change. Yes. So this is the level is around 13,460. So it's about 466. So I would say odd, 5-10 points odd. So I can give the benefit of doubt to a retracement. Now, what I will be interested is if my this pullback is stopped at 61.8%. This is coming out to be between 530 to 540 levels, 13,530 and 13,540. If markets are stopped here and tomorrow when they start to go down, that will be okay. But the higher it keeps on going, that gives me an indication that markets really want to go up and test the highs again. So tomorrow what we have to see is where the markets are going to make their highs, where the markets want to stop. It is possible tomorrow we get a gap down and again move from this area. That would mean that 50% rule applies. We can compare the same thing what happened in 31 August. So all these things I will come back with you on in the evening when I talk about the data. So we can analyze about this in detail. But I hope today was a good day for all of you. And I hope we recommended everyone in our groups to not take positions home. Start a fresh start, because people are getting confused right now. If you see the December future data, you can see there were too many buyers in Nifty and very small sellers in Nifty. I think it was about 3 times. And that was an indication that maybe the clients are becoming extremely bullish and FIR still sellers. So we'll see all about that in the data. But, when this markets fell down today, it was not a very difficult trade. We had sent these photos in our groups also. It gave you something like a descending triangle. There was some kind of positive divergence, and you can see an inside candle over here. That was a signal for you to go long in the market, and a bottom was formed. And also understand one very, very simple thing. Markets, if they wanted to go down today, they will open in this area. Yesterday, the closing price yesterday was around 336. If markets wanted to break these lows, they would have opened in this area. They would not have opened around 440 levels. That is why markets, couldn't have gone down 2% and then again fell down. So these are small points you have to keep it in your mind. it applies to tomorrow also. If markets tomorrow want to break these lows of 13,200, they will not open here, because at that point of time, they would have to go down 250 points to break that level. That's about 2% on Nifty. If they want to go down tomorrow, they will be opening at this level. And also, if they want to go up, they will be opening at this level. So markets always give you that information. It is basically us who basically confuse us with the minds. So this is all for now, guys. I hope you had a wonderful session. That's the post-market analysis. And I hope you had a good recovery in the portfolio, long-term portfolios. And I recommended you all earlier yesterday that it's every fall that you get in the market is a good thing for the long-term investor. So you can add your positions in the market because you are getting things at a very discounted price. So as a long-term investor, use any dip in the market, add your positions, add quality stocks and hold them for a long time, because in the long run, markets will remain bullish. Do what you want. So that's it for now. I will see you in the evening for the post-market analysis. Thank you so much.